Hey everybody, this is Lance from tastytrade.com. Just wanted to go over covered strangles that I did on Hood and Iron. So first for Hood, last Friday I bought 100 shares and bought it at 29.5. And what I did is I sold a covered call at the 30 strike price, and then I also sold a 28 put. For the 30 call, it took in 0.61 premium, which is over 2% return compared to the bought shares. And then the 28 put I sold for 0.25. It's a little less than 1% of fully cash secured. However, I did do this with margin, so it's actually a bit higher gains on that. For Hood, you only need 50% of your buying power. So 29.50 divided by 2, 14.75. That's the total amount of cash I needed to do to buy the 100 shares. For the 28 put, it was fairly low too. I don't remember the top of my head exactly how much. But it expired. Hood was above 30 at the end of the day. So I'm going to lose my 100 shares of stock at the 30 strike price. The 28 put expired worthless. That's a 100% gain. So on the put, I made the full $25. On the covered call that will get exercised, I bought at 29.5. I'm going to sell them at 30. So it's an actually $50 in capital gains. And then total return was $50 in the covered call from the capital gains, $61 in premium from the covered call, and $25 in premium from the cash secured put. So overall, very good trade. I made a good amount of return for the week. I ran and did the same thing. Friday, I bought 100 shares at 11.28. I sold a naked put at 10, and that expired worthless. So at 10.67. So I took in $27 on that. I also sold the 12 call. Took in $45 for that. I have a 6.5 naked put from a while ago. Just going to let that expire as well for $29 next week. But just looking at the first three lines here, I did buy at 11.28, but I just lowered my cost basis. $45 on the covered call, $27 on the cash secured put, and I'm pretty close to the break-even price of the 10.67. I'm okay accumulating a few hundred more shares if it drops. So if we got below the 10 strike price, I would be okay buying another 100 shares at 10 because it'll lower my cost basis. Having 100 shares at 11.28, having another 100 shares at 10, and also taking in premium while I do it. So this is a fairly flexible covered strangle strategy. These are a little bit riskier positions than I normally do. I typically do these on SCHD, silver. They're not going to have as much implied volatility and move as much. But just some ideas for covered strangles. I do plenty of these type of strategies. I don't even know the number at this point. There's so many different trades I do for the inner circle at tastytrade.com. So if you're interested, you can click the link in the description down below. Leave any comments if you have them, and I'll see you guys on the next one.